Looking for safety in a rocky market? Havens might be for you. A safe haven asset is an investment that's expected to either hold or gain value during periods of economic turbulence. Joining me now to discuss, we've got Mike McGlone, who is the Bloomberg Intelligence senior macro strategist. Mike, you got to break down some safe havens for us, especially this week, and why they tend to hold value during volatility in the market.
Hey, Brad, we have to start with treasuries, and treasury T-bills are the safest assets on the planet. You want to extend a little duration. If we get some deflation, you go out to T-bonds. But of course, there's gold. Now, gold's somewhat of an alt safe haven store of value, and as we know today, it reached $3,000 an ounce, but for good reasons, partly because the stock market's starting to go down.
And so with that in mind, where are the most popular safe haven plays that we've seen really emerge over the course of volatility like this week?
Well, this week it's been gold, most notably, partly because there's a unique situation now where we've had a good almost 15 years of the U.S. stock market going up and the U.S. dollar based on relative to the rest of the world going up at the same time, i.e. they're together, the U.S. dollar and stock market. Now they're both going down together. Both of those are good things for gold. This is a question how much further they go. And as your previous person came on, it said you have to be nimble in this space, but I'm worried it's going to continue. So gold punched up around 3,000 today. I'm just afraid it's going to stay higher, even though it's pretty good resistance for now. But generally, safe haven number one is treasuries. Gold's part of that. It just also is a risk asset too. It does move around. It's just known to be basically zero correlation to the stock market.
Is what's held true with this new marker for gold and this new record for gold that we've seen struck this week? Does that hold true for the rest of the metals and other commodities when we see a safe haven kind of inflow like this?
No, definitely not. So gold is the only major commodity over time that typically goes up. The way I like to describe most commodities is most commodities go down because they went up. Look at crude oil. It's at $67 a barrel right now. It went down that much because it went up too much to the peak in 2022. That turns on the forces of elasticity of supply and demand and pushes it back lower. You've seen that with egg prices right now. They're going down because it shut off demand because prices went up. Gold is the only one that goes up over time and stays up, particularly for investors, because you can invest it and hold it on your body. It's easy to store. The most significant metal that's really rallying this year is copper. Copper's near an all-time high. It's reached near $5 a pound, but it's going up for basically the wrong reasons. It's worried about tariffs. The U.S. is a net importer of copper, so it's pumping up the price of copper in the U.S., but much more, actually the widest spread ever versus copper that trades in London. So I'm worried that copper, the metal known as a PhD in economics, it's kind of indicative of global economic growth, is more likely to go lower, but it's proven me wrong lately. It keeps pumping up higher. I'm just worried if the stock market continues to go down, gold will go up, and copper will have pressure to go lower.
And what does that hold for some of the other safe havens that are more stable? And you mentioned bonds, you mentioned how people will typically look at treasuries and look at the steady rate of growth if they're looking to kind of remove some risk from their portfolio.
Well, the number one way to move risk from portfolios is to lighten up on risk assets. And the riskiest assets are cryptos. I like to point out, it looks like Bitcoin's peaked around 100,000. That's why gold's continue to go up. That's the number one reason. Keep it simple. Just sell some. I mean, hopefully not in the way down. The key thing I want to point out, the risk I think that gold's pointing out is we have more significant risk towards normal deflation on the back of inflation. That's the rule of what happens historically when we get a lot of inflation. We did. Now we're starting to deflate a little bit, i.e. risk assets. You're seeing that in China. Severe deflationary forces, which tilts me over to the U.S. Treasury long bond. Right now, the U.S. 10-year note's at 4.3%. In China, it's 1.85%. A lot of the other countries in the world are much lower. So if the stock market keeps going down, that means pretty significant deflation. It's just deflating the inflation we had. It means the Fed will have to ease. I mean, some of the best performing assets might be U.S. Treasury long bonds, and they have a pretty significant discount to the rest of the world. That's also part of what's helping gold get a bit of a bid.
Mike, really valuable insights. Thanks so much for breaking this down for us.
Thank you.